In any business, cash is a highly desired asset. However, it is very easily stolen and can be quickly converted into other assets with little chance of detection. Therefore, it is extremely important for any business to implement internal control methods to safeguard their cash and ensure that it is recorded accurately. As most companies keep the majority of their cash in a bank reconciliations are a common and effective way of maintaining control of cash. A bank reconciliation is the process of recognizing and noting the differences between the cash balance on a bank statement and the cash balance in a company's records. To perform a bank reconciliation, a business must carry out 3 steps. The first step is to reconcile the bank balance. This involves adjusting the cash balance reported on the bank statement to the company's actual cash balance. There may be a difference in these two accounts for a few reasons. A deposit in transit is a deposit made by the company that has not yet cleared the bank as of the statement date. The cash is now in the bank, so deposits in transit should be added to the bank cash balance. Conversely, an outstanding check is a check that the company has distributed but does not appear on the bank statement as it did not clear the bank by the statement date. These should be subtracted from the bank cash balance. The bank can also make errors. For example, suppose a bank wrongly records a $10 deposit as $100. The bank balance is overstated by 90 and should be decreased by 90. Once these adjustments to the bank balance have been made, the adjusted bank balance should equal the actual cash balance to be recorded on the statement of financial position. The second step is reconciling the company book balance. This involves adjusting the cash balance reported on the company's books to the actual cash balance. These accounts may differ for 2 main reasons. Credit memoranda may arise when the bank collects cash on behalf of the company. This may include collection of a receivable or interest on a note. Credit memoranda should be added to the company's book balance. On the other hand, debit memoranda may arise from fees charged by the bank or from bounced checks. Bounced checks being customer checks that have been returned for insufficient funds. Debit memoranda should be subtracted from the company's book balance. Finally, the third step of a bank reconciliation involves adjusting the cash balance. Once the bank balance and the company's book balance are reconciled, the company's cash balance must be adjusted to the actual cash balance determined by these reconciliations. Therefore, this final step involves recording the necessary journal entries to adjust the company's book balance to the actual cash balance. Thank you for watching.
Created using Powtoon.